Shoot, I clicked the wrong button. That song was good.
Intensity has fallen by 1/2. Final extermination phase can start.
Good morning. You guys ready? Who's alive? Who's alive? NFP 180, baby. Thanks, Mom. You don't have to DJ anymore. That's cool. Thank you. Big round of applause for my mother for DJing this morning. Thanks, Ma. Yeah. Hey, good morning. NFP 180, FXStreet.com. Good morning, everybody. My name is Wayne McDonell. I'm a currency trader just like you. Been on this journey for a while, so I'll take the lead, bro. Make sure you ask questions, get involved, take notes, click the like button, tell YouTube that FX Street is providing quality content to the foreign exchange community. This is the 180th iteration of this webinar, which makes it the 15th anniversary of Trading Non-Farm Payrolls Live. So thank you, FX Street, for being wonderful hosts. Thank you for having the best moderators in the business. And here we are. We got yet another non-farm payrolls. So hopefully you've been doing your work, doing your analysis. I wrote many years ago, I don't know about many, 8 years ago, I wrote an article for FX Street that detailed how to create a model to trade non-farm payrolls. Yes, thank you for the cool shirt. Thank you, Hon. This is going to be a short non-farm payrolls because the markets are actually closed. And when the markets are closed, there's less market participants. When there's less market participants, the market behaves differently. There's less of a creation of a self-fulfilling prophecy, which is another way of saying your technical analysis is less likely to work today than any day. So here's the thing. I got my shirt on because we're only going to do 90 minutes today. The news is going to come out. We'll see what happens. We'll add it to our model. Before then, we'll talk about what's likely to happen and all that kind of stuff. I have some analysis to share as far as the trend in non-farm payrolls, the trend in weekly jobless claims, and of course that secret piece of alpha that I've used for many, many years. I'll give you that. Pretty cool. But we'll be out of here, and then as a vaccinated persons, I'm heading to the beach with my family, and we'll be building sandcastles before dinner. So 90 minutes, we split. Again, it's weird that this is such an important NFP for us sort of spiritually. It's an important NFP just because this is the one that's going to confirm that we're getting out of the COVID shutdowns, and yet the markets are closed. So it's not me, it's that the markets are closed. Hey, but when the markets are closed, I got to go to the beach. You know, with a natural body like mine, I just need to be at the beach. Yeah, it's just what I do, yo. It's in my blood. So without further ado, let me get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. So again, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Hey, you're a trader? Traders need brokers? Why don't you give Traders Way an opportunity to earn your loyalty and respect? Visit TradersWay.com. Why? I don't know, because if because you like the stuff that I gave you today, and you're like, you know what, he's a cool dude. I'm going to go check out Traders Way just to show some respect. Cool, right on. Fast execution speed, low fees, awesome swaps. I can show you swaps today. And of course, world-class execution and customer service. So TradersWay.com, give us a chance. So we got an NFP coming on. All right. Davey says, so excited to learn fundamentals. So you're in my fundamentals course? Very cool. Very cool. All right, so let's, a good place to start here is, where are we? What is it that we know? Well, here I've gone to the St. Louis Fed. They have something called the Fred, and we use, economists. We economists, right? We economists. I am an economist. So we economists use these tools to do all kinds of things. Right here, I have the trend, and I can go all the way back to World War II in non-farm payrolls. Hang on. There we go. Okay, there's the trend in non-farm payrolls. These little gray lines are recessions, by the way, the vertical ones. All right, so getting back to kind of where we are now, here's pre-COVID, COVID, no COVID, wham. Okay, and now we're rebuilding. Okay, so our big question now is, as a resident of the United States of America, whether you're a citizen or a permanent resident, a visitor, a tourist, or an illegal, The question is, when do you get to go back and eat food at Applebee's? And therefore, when does the waitress at Applebee's get her job back? Okay? Assuming she didn't spend the last year doing online education, getting a better education and becoming like a software engineer or something. But if she wants her job back, cool. When does it happen? Okay, so there's a bunch of things that are going to happen today. You can see the trend in non-farm payrolls is positive, in particular, this sort of area. The rate of change is different, but that makes sense, right? And then there seems to be a bit of a pickup, and many people expect a large increase. Okay, that's cool. So that's one thing, a large increase. Some people are even predicting 1 million jobs. Yeah, not 250,000. Some are predicting 1 million on the NFP print. Wow. Okay, that's cool. So that's one thing. That's the number of jobs. The second thing is because of that, we're also going to have a drop in the unemployment rate. Okay, getting closer and closer to full employment, but we got quite a ways to go. But this gap from this top to this top is expected to close quite a bit today. The next thing that you might want to look for is who's getting the jobs. Okay? Well, who lost their jobs? Well, most professionals, bankers, lawyers, accountants, programmers, managers, that kind of stuff, they didn't lose their jobs. So they retained their jobs, but who did lose their jobs? Hotel workers, restaurant workers, that kind of stuff. If you're in the business of like real estate, if you're in the business of construction, you're busier than you've ever been ever. Like business is so crazy that you're booked for the whole year till the rest of the year. You got jobs. So it's really it's sort of hospitality focused, right? Whether it's restaurants or hotels or travel, tourism, that kind of stuff. So what we'll see, which is kind of strange, is now that we're adding millions of people back to the workforce, we're adding the ones that don't make much money back to the workforce. The people that make a lot of money never lost their job. So you'll see the amount of employed people will increase. The amount of unemployment will decrease, but average hourly workings will fall. Our average hourly earnings will fall because it'll just be a sign like who's getting the job back? The maid at Marriott that makes your bed for you in the morning. Okay, she gets her job back. Awesome. Okay, but that'll drag down average hourly earnings. So there's sort of like these weird conundrums that are inside the data, but look for that today. So better than expected non-farm payrolls, a drop in unemployment, but a drop in average hourly earnings, which also would be like deflationary. Remember, there's a lot of people, including the Fed, looking for wage increases as a sign of potential inflation. Potential inflation would lead to potential raises of interest rates. Potential raises of interest rates have its consequences. A lot of people think it would make the dollar strong. I will tell you it will make the dollar weak, but it will cause a rotation out of some stocks and into other stocks inside your equities portfolio. Much of that has already occurred, though, prematurely in my opinion, but nonetheless. So we'll see these conundrums because some people are worried about inflation because they're like, look at wage growth. And you're like, yeah, well, you laid all the poor people off. So the only people that have jobs are the ones making tons of money. There's your wage growth. Is it true wage growth? Did the people that kept their jobs, did they get raises? Okay. I only know one person that got a raise in the last year. That was my friend that went IPO. Now he's baller, dropping money out of the sky. Now he's like this. Come visit me. Come visit me. I'll take care of you, Wayne. Come visit me. I'm like, dude, where's my IPO? So anyway, so he got a raise. Currency traders probably did all right. Right. But anyways, so there's one of these paradoxes. So we're going to get tons of awesome jobs. Unemployment's going to fall, but wages are going to fall. And that's deflationary. And people are going to go, oh, wait, what happened to all that inflation I was worried about? And I'll say, I know, right? Cool. So that's what's in the works. You guys excited? Hey! Yeah? This is cool stuff. Cool beans. Okay? Okay, and check this out. We're kind of just back above this old area here, back in 2008, down. Okay? All right, so the velocity is great. Okay. Next one I want to show you is the trend in weekly jobless claims. March, April, May, June, July, August, September. Okay. March, April, May, June, July, August, September, October, November, December, January, February, March. So steady trend. I just want to show you that's part of the analysis. Right. There's two things we're kind of looking at. The first one that when I showed you this one based on trend in non-farm payrolls, this is the trend in people filing unemployment claims. You can see that trend is down and the other one's up. They're related, obviously, but it's different methodology. So they're really confirming each other. The Bitcoin Turkish lira. Yeah, wouldn't that be something, hey? You couldn't adjust the numbers fast enough. So anyway, so I'm just confirming one of the things you should look at is weekly jobless claims. The other one is the trend in weekly jobless claims. The other one you should look at is the trend in non-farm payrolls. Okay? Another piece of alpha that I've been using for many years is you go to Challenger Christmas and Gray, which is really like a recruiting firm. I forgot they changed their website. And then you go to here. Job cuts announced by U.S.-based companies fell 86% in March. What? These are mass layoffs. This is not, Sheila from accounting got laid off. This is 50% of the company got laid off kind of trends that they track. So they're looking at mass layoffs. And I think it's 10, 50, 20, 50? I don't know. But it's when a company comes in and lays off a bunch of people all at once. Okay? So check this out. This was just announced a day or two ago. I can't remember when. Anyways, job cuts fell 86%. So that's one thing you can say is there's going to be a lot less, right? So like, for example, what I say in my article is that if you expect 250,000 jobs and then Challenger, Christmas, and Gray says they were 25,000 mass layoffs, those numbers don't get recorded in the fuzzy logic of the NFP. So remember, NFP is really two surveys, a household survey and establishment survey. They survey household, they call up houses and like, hey, does anybody, do people in this house have a job? Yes. Thank you. Click. And then the establishment surveys, they go to businesses and they're like, let us look at your payroll stubs. Okay. Doesn't track U6. Tracks U2. No, it's not U2. It's U3, U4. How come I can't remember? U3. It tracks U3. It doesn't track U6. So anyway, so you get these numbers. They throw them together because it's only 60,000 in the surveys. So they not U5. Oh, U funny. Yeah, no, U6 would do the underemployment, but this stuff doesn't track on underemployment, right? So it wouldn't be U6. So, but we're concerned about that, and that's kind of what we're getting to in this non-farm payrolls as well. By the way, if you're not sure what I'm talking about, let me know, and I can step back a little bit. But anyway, so they call 60,000 houses, 60,000 businesses. At the end of it, they say, okay, for 300 million people in this economy, we came up with a non-farm payrolls number. And you're like, wait, you only talked to 60,000 people and 60,000 businesses. You may have missed a few, right? You might have missed something. So this Challenger Christmas and Gray comes out and says, oh, well, we're actually just tracking mass layoffs. And so often what I'll do is if the Challenger report says 25,000 mass layoffs and NFP comes out is expected to be 250, I'll say, oh, 225. I'll just take it off the top. Cool. All right, so nobody has a question about U3s and U6s and stuff. So therefore, it seems like most of you guys attend my daily webinars as clients of tradersaway.com. So that's cool. You're caught up. All right, so here's the calendar. This is the FX Street website, as you guys know. There's JT. All right. Check that out, huh? It's amazing. Like, yeah, we're going to double. Pretty amazing, right? Yeah, that's what I do, Davey. Yeah, David, that's right. And again, on FX Street, there is an article, quite detailed, how to create a model for the headline non-farm payrolls, the methodology in which to create the model, and then some tips and tricks for setting up trades. I think I give you a volatility trade and a counter trend trade. Okay. Coolio. Okay. Yeah. So we will just sit on this and get our number. Right. All right. Okay. Cool. So I can get rid of this now. I can get rid of this now. Okay. By the way, at some point, you should probably get very comfortable with the Fred. It's really cool. Okay. And so you can do something like U.S. nominal GDP. Okay. Right there. Very simple. It's something I've done past. Okay. So you can get GDP. Okay. PCE out of there. Gross domestic product. I think right. Let's do real GDP. Probably makes more sense. GDP. So this is the big one. You can do real GDP, which is there's nominal GDP, there's real GDP, and then there's real GDP per capita, and that's the big one. That's really tells you. Does anybody know what this reasonably represents? Well, she loads. I don't know why it's so slow. I guess I'm running the webinar. It shouldn't be this slow, though. Does anybody know what real gross domestic product per capita would represent? What's a different way that we can call it? Wow, look at this. I've never had Fred lock up like this. Maybe did my internet go down? I don't see anyone in the chat either. All right, Google speed test. No, I'm good. No, that's what it is. Okay. What can it represent? What's another term? Not a term, but what's another way of looking at it? There we go. Oh, it locked up for you too. I guess there's right before non-farm payrolls, there's a lot of economists running this. Standard of living. Increases in standard of living. This is productivity per capita, right? So your productivity, right, is going to be equal to your consumption plus your savings, right? Whatever right, you're going to produce and you're going to get paid, you're going to consume some and you're going to save some. Okay? Now, what's another way of saying savings? It becomes this, investment. Because let's say to save it, you either put it in a bank account and the bank loans it out as a form of a mortgage, or you put it in your retirement account and it turns into a mutual fund investment, right? Cool, right? And so now this is what? Well, if you look at GDP's formula, GDP, that's equal to consumption plus investment, okay, plus government spending, plus exports minus imports, right? So this is your private Idaho. This is your personal GDP. Your productivity will get you paid, so you can call this wages. Okay? From your productivity, why is productivity? From your productivity, you will get paid, you'll consume some of it, and you'll invest the rest. The government, the whole aggregate now, so you can look at this as a microeconomics, and then on the macro, GDP, which is the same as Y is equal to GDP, and GDP is equal to C plus I plus G plus exports minus imports. Okay, which is now the aggregate of everybody. Okay, so we want to look at this. Okay, and that's why I say this stuff is actually going to fall today, and typically that's considered bad. It's been rising recently, and most people would say that's good, and I say, well, if you flatten it out over the course of 3 years, nothing changed. So those that were freaking out about inflation and pointing at the increase in wage growth or real gross domestic product per capita, I'd say, well, what you're missing is the why. You're only looking at the number and you don't understand. What's happening here is poor people lost their jobs, so we only have rich people making money. So guess what? Per capita, wages went up. Millions of poor people lost their jobs. I know that's a gross oversimplification, but when you look at the data, right, we're going to get like 1 million jobs added, but this number is going to go down. We added 1 million jobs, yeah, but they make less money. So, like, put it this way. If wage growth falls this month, then the people that got the jobs this month earn less money than people who had jobs last month and the month before. You see that? That's the only way to do it. So you can say, well, it's lower income workers, it's less skilled jobs, it's probably, people throwing bags onto airplanes, it's people, making hospital corners in Marriott, it's people, doing the dishes at Applebee's, okay? Which is, look, except for Fight Club, there's nothing wrong, right? Like, that's good. That's good. But you have to look at the data and understand what the data means or where the data came from. And media certainly misses this kind of stuff. And a lot of really smart economists and investors miss this stuff too. And so people were freaking out about inflation and they're pointing at wage growth and they don't understand. They see the increase in wage growth. Wages have gone up and they're like, I was told when I went to Wharton School that if wage growth goes up, we're going to be creamed with inflation. Like, okay, you went to Wharton. Okay, great. So guess what? One, you're not looking at the relative change over time. two, you're not looking at why the wage growth is up or down. You only see that it's up. You don't understand the difference between the correlation and the causation, so you're misinterpreting the data. Three, you're isolating jobs in the United States like they're only jobs in the United States, and in many cases that's true. The waitress at Applebee's isn't serving a billionaire in Malaysia, but on the aggregate, when you look at the United States, one reason that we don't have inflation is we participate in global trade, therefore exporting our inflation. And so, sir, ma'am, you're freaking out because you don't understand. The sky is not falling. Okay, cool. Cool. Too much? Was that too much? Is that too strong? Am I coming out hot? Did I just backslap pretty much everybody in the whole world except us? Cool. Well, at least now I'm clear, right? At least now I'm clear. Cool. So, yada, 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 yada. So this is a great, this is one of my favorite times of the year. I love this time of year. Okay? Love it. This is my favorite time of year. Love it. Love it. So, fingers crossed for you. I hope you're doing great. Check it out. U.S. dollar unbelievably weak. Unbelievably weak. We've had lots of strength over the last 3 months, and all of a sudden on April 1st, the dollar just tanks. Okay? How many weeks ago did I tell you to expect it? How many weeks ago did I tell you to expect U.S. dollar weakness to happen around April 1st? How many weeks ago did you know this? Mm-hmm. 9 weeks, says Peter. More than 3 months, says Marina. Focuses months. Since January, says Johnny. That April 1st, the dollar would weaken. What the? That can't be true. That can't be possible. That's impossible. There's no way. Cave says 10, maybe 11 weeks ago. That's impossible. There's no way I could have told you that April 1st, the dollar's going to be unbelievably weak. Can't be true. But it is. Cave's now 12 weeks. Cave is like an auction. 13, who will give me 13, 13, 13, 13, 13. We got 11 on the, we got 12 on the table. Who will give me 13, 13, 13, 13, 13. Okay, to the gentleman. To the gentleman in the cave. Yeah. Cool. 12 and a half. Give me 12 and a half. 12 and a quarter. 12 and a quarter. We got 12 over here in the cave. 12 and a quarter. 12 and a quarter. 12 and a half. Can I get 12 and a quarter? 12 and a quarter. Yeah. But why though? Haha. Well, Peter, you're a member of FX Bootcamp, right? So you should know that. If not, we need to go back through those videos. Cool. Right on. So I would like... Sorry, it's already sold. You already paid for it, John. You know, Cave, I've seen it. I've been to hundreds, literally hundreds of auctions. I've seen it where the guy goes around and then points back at the guy that bid and he bids again. I've seen it. People just freak out. They don't know what's going on. And they're like, yeah, okay, he bids again. Okay, we got 14. Cave just bid it up to 14. Can I get it to 15? Can I get it to 15? Sir, are you in? No. And then I point back at Cave. He's like, 15. I've seen it. Like, oh my God. So anyways. Okay, cool. So, yeah. Oh, by the way, I think it looks like 90% of you, 90% of people that are here today attend my daily webinars with Traders Way anyways. But if you're new to me, if you're new to my training and all that kind of stuff, and we've piqued your interest, you can visit fxbootcamp.com. My training courses are 76.4% discounted right now, but I am raising prices. I left them 76.4% off for an entire year to support the Forex trading community during COVID, so that they had something to do at home besides binge watch Netflix. But that's ending. So if you're going to take advantage of it, wake up and do it now. The coupon code is right on the sign-up sheet, so just go to fxbootcamp.com. Cool. So Aussie, Euro, too bad for kitty cat. Okay, pound, Kiwi, and Swissy. Now, one of the things I discovered yesterday as I was doing fundamental research is the EIA came out with a new report saying they don't expect oil prices to go up over the next 12 months. And I said, oh, snap. And then I think it has something to do with productivity in Texas. Texas got hit by an ice storm about a month ago, and it may have caused some pretty serious damage. So the United States will be importing oil this year instead of exporting. I thought that was interesting. And what does that do to the dollar? Well, if we're importing oil, we're exporting dollar. The same way if you're importing an LG OLED TV, you're importing an LG OLED TV to your house, but you're exporting money out of your account. Okay? Was that right, Eds? Eddie? Really? All right, well, maybe this mic is turned up. I'll turn it down a bit then. All right, but thank you. Hopefully this is better, eh? All right, so maybe that's, we're looking at kitty cat. Maybe there's a hesitation there. Maybe there's something else. Yeah, I don't know where the sensitivity is, but I'm looking at it over there. I'm orange lining, but I'm not red lining. But I think Canada is going to do well exporting, okay? I think it's going to do well exporting, but maybe oil is not going to go to 100 in the next 12 months. So, and other commodities are already up there. So maybe we just sort of need a catch-up effect. Like Canadian dollar, I would still expect to appreciate versus USD and modestly versus yen, and not appreciate versus like Aussie or pound or something like that. You get a pop screen. Cave. You get a pop screen. I got a pop screen. Hey, I got your pop screen right here, huh? I got your pop screen. In sooth, I know not why I am so sad. Yeah, you get a pop screen. How dare you? You better watch your mouth, mister. All right. Cool. So let's get on with some fun here. What do you guys want to trade? What do you guys want to trade for non-farm payrolls? It's all good. Ist gut, ja? So here's your my oh my WTI. Okay. So we got some plans on this one. If it rolls over, we expect a big rollover. Okay. And then we got a plan B somewhere in here. But that EIA EIA said, if I remember correctly, $57 next year. You're like, wait, it's $60 now. Okay. Hey, Cave, how about TyBot? THB/TRY. Hendrick says, piggy, piggy, piggy. Yeah, all right, cool. Cool. Kurt wants piggy. Right on, Kurt. Jimmy, Aussie dollar. Samuel B. Sammy, where you been, buddy? Alex Bailey. Cool, man. You guys are awesome. Victor. $1. Right on. Okay, cool. So anyways, here's what I'm thinking now. I might have to moderate it a little bit depending on if EIA is right. But right now I'm paying attention to something like this. So some up and then some down and reset off the 200 as a first move. Okay. So that's oil. That drop to the 55 is technically important. We can zip over to gold. I'm a bull on gold, except we're in a bearish market. So I've been waiting and waiting and waiting. That's how it works, yo. And so we're creating a double bottom off of a zone I created maybe a month ago. So I've been waiting around this 17 number, and I want to see now a higher high, higher low. So that might put me in the buyer's seat as early as next week. Thank you, Goldie. And then biddy, biddy, biddy. All right, here's our old trade that we've had for quite some time. We said when we were up here, by the way, when we were up here, we saw the double top. So I created two plans. And this plan I did over a month ago. So you might have saw this last non-farm payrolls. I said, if we kick off the 3A2, okay, we're going way up there to like 75, I think it was. But plan B was if we kick off the 618, we're going to 65,000. Time then went on and we came down here. And so since sort of the middle of March, we've been expecting Bitcoin to go from $50,000 up to 65,000. And we did this trade plan when we were here. So we said 60 down to 50, 50 up to 65. Okay. How do I decide those zones? Support and resistance. Okay. So the first part of everything is your macro bias, which means I'm bullish on Bitcoin. Another way of saying it is I'm bearish on US dollar. Okay. Great. So my macro bias, then step 2 is support and resistance. Technical analysis. Okay? That's how I do it. That's what the Wayne do. Okay? That's what the Wayne do. Okay? Next step is probably you got something like this or something like this. Aight. Cool. I just want to hit some of these before NFP comes out. Still got about 15 minutes. Very cool. Gold already did. You missed it about 4 minutes ago. Take a look at some exotics. I have one position here and I have another position here. Both are selling, of course. And we didn't quite breach this. So we got some work to do. Bump, 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 bump. Multiple time frames or one time frame? All time frames, dude. That's our job. Okay? That's our job. All time frames. Which time frame? All time frames. You either know or you don't know. That's one of those things, Dave. Okay? Peso. Oh, my peso. My peso. My peso. Okay? Again, sort of like like the Rand. We're on our way. Okay? There's a battle going on, and I'll highlight this battle a little more on peso here. There's some bulls that live here and some bears that live there. So we kind of have to battle it out. What I typically prefer is that, there's a front run and then, the lower low is created. But it's too early to tell, so I don't know. So you gotta be careful. And if you don't have conviction, maybe take some profit. If you have conviction, don't worry about it, huh? Don't worry about it. Take a look at some yen pairs. B-D-B-D-D-D-D-D. Oh my God, that's so beautiful. I know, right? So let's do, let's measure it. Okay. Cool. Positive slope. Okay. Kicking off the one standard deviation is holding. No outliers. Okay. Trending up, it is slowly trending up versus quickly trending up. So the rate of change is slow, but this, M is greater than 0. So this is bullish. Also, this is the buy zone for the month of April. And that puts us north. And the actual target for the month, I'm going to call this a central for now. Okay, and not an M2. Central pivot predicts 87.22. So the target, for example, bum 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 bum. Easy peasy lemon squeezy. Don't you love this stuff? Yeah, boy. Take a look at Beastie. Beastie breached. You're kidding me. Crazy, right? Okay, this is day trading. So check this out. Shows you how bulls and bears take turns. This is the bears sell. Their target was here. So bears sold here, hit the target, exited for profit, and bulls took over again, and now we're taking it this way. Dipsy-do, man. Dipsy-do. Dipsy-do, man. Okay? Now, the interesting thing is we expect March 17th, we expect Japanese yen strength. How many people can confirm that we expected that weeks in advance? Japanese yen strength, not on March 16th, not on March 19th, March 17th. How many people knew that was coming, or expected it really? Expected it coming weeks in advance. Hey! Yeah! Oh my God! Don't you love currency trading? Nice. 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 Cool. Great. Fine. There are people out there that don't see this coming and they're blindsided. And that's how we get paid, by the way. Their losses are your gains. Yeah, Meta crushed it, huh? Yeah, Meta was on the dark side. She was on the bearish side. Now I think Right now you're on the light side again, which is good. Cool. So we're climbing up. Here's our kitty cat. Here's our kitty cat. Zip, 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 zip. Coolio, right? So you can see front run is already missed. So, yeah. All right. Yeah, front run's over, man. March 1st. That was supposed to be a straight line. April 1st. Okay. February 1st. January 1st. December 1st. All right. Here's how difficult it is trading. First of all, you decide you want to be a bull. Okay? By the way, let's do it again. How many people knew that November, particularly because of the political election, how many people knew November was going to provide a giant, massive rally in yen pairs straight up like a rocket ship? Let's do that one. How many people knew that months and months and months in advance? To hold their money, hold their trades, keep their powder dry until we hit November, and then unload. Fire for effect. Go for 10,000 pips. How many people heard me say that? Get ready. You're going to make 10,000 pips. Not 1,000 pips, which is some people's year. 10,000. Yeah. Months and months and months and months. Now, let me ask you, how many people made many thousands of pips because they were ready, willing, and able? How many people here, because they were ready, willing, and able, made thousands and thousands of pips between November and January? Jim made thousands of pips. Who else? Johnny made thousands of pips. Cool. Marina made thousands of pips. Raymond made thousands of pips. Maida was sick that day. Yeah. On made thousands of pips. Thousands. Dude, thousands. Wade, thousands. Some people don't even know it's possible. Okay? Some people don't even know it's possible. It's a wake-up call. Frederick, we're not interested. Go scam somebody else. By the way, Frederick, because you're spamming people in a live webinar, it shows that you're so poor and so desperate for money that whatever you're selling doesn't work. So grow up. Think a little deeper if you're going to scam somebody. Thank you. Try a little harder, Frederick, to scam us. Do a better job. Come on. That was pathetic. Cool. Yeah, so very cool. Good job, FX. FX Pip, or Forex Pippers is up 24,000 pips right now. Very cool. Very cool. So again, the reason I bring this up is many people, if not most people, have no concept of this is what they should be doing. There are people saying the way to get rich is to throw down a quick trade with a tiny little stop, but maybe you make 25 pips. Oh, I made 25 pips. And it's stupid. It's stupid, right? It's a fool's fool's errand. Because if you do the math, you'll realize the only way to make money if you don't make any pips is to have giant lot sizes, which means you're over leveraged, which means you will blow up your trading account. Do you understand that? If your guru makes 25 pips on a trade, they don't know how to trade. It's an embarrassing trade to take profit on 25 pips. Unless you're scalping. That's an okay scalp, but that's not a career. That's a job. So anyways, why did yen crosses go up? Alex, join FX Bootcamp. It'll take me 6 months to a year to teach you, but then you'll know it years in advance. Years and years and years in advance. It'll be a skill that you have. Okay? So you need to take the step forward. If you're, right, you need to act. Okay? Another way to do it, if you feel like that's a sales pitch, Alex, this is my 180th webinar on just non-farm payrolls. I've been doing this at FX Street for 15 years. Watch some of the videos, man. Okay? There's lots of material I've done with FX Street for the last 20 years. Reach out and grab it. Or speed it up and just join FX Bootcamp. Your choice. Cool. All right. So I guess most of you guys said you want to do Pig Dog for non-farm payrolls. Okay. So we'll do Pig Dog. Okay. Do you want to do this point of view? It's not even Pig Dog, which is funny. Cool. So let me reset this then. This has got to be Piggy. Piggy, 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 can't you see? Sometimes your words just hypnotize me, and I just love your snazzy ways. Sorry, this is from training I was doing. Cool. Frederick, come on, try harder. Dude, seriously. It's embarrassing. You're going to have to try harder to scam me. You should say things like, hey, man, a friend of mine is the Prince of Dubai, and he has inside knowledge at some big bank in Europe that they're going to clear out their Bitcoin, and if I join your WhatsApp group, man, we can get rich really quick. I mean, come on, at least tell a story. Put some panache in it, right? Lean in if you're going to try to scam me. Come on. Come on. Gee whiz, try it. I mean, come on. Woo me a little bit. Woo me. Okay? Yeah. Come on. Gee whiz. All right. The kids these days, huh? Don't know where he's from, who falls for that easy. Come on. Bring out your big guns, man. Put some effort. Well, yeah, at least program the bot better, right, Marina? Sweet talk me. Slip in my DM. Right? Slip in my DMs. Cool. All right, so we got about 90 seconds to go. Cool. Let me get back to FX Street. Where's my FX Street? Where did it go? It's a shopping cart. Did I close it? Sorry, guys. FXStreet.com, economic calendar. Cool. So I'll bring that up. So once again, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. If you need a broker because you're a trader, hey, let us earn your loyalty and respect. Visit TradersWay.com and open up a demo account. Fast execution speed, narrow spreads, wide swaps, world-class customer service, and I do daily free webinars. TradersWay.com. If you need detailed hours and 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 hours of amazing trading on fundamentals, day trading, swing trading, carry trading, etc., fxbootcamp.com, 76.4% discount. Coupon code is on the order page. Cool. Got all that business out of the way. Just moving over to the calendar, and we'll get our headline number. This could be as high as 1 million, some people think. Spinning, rolling, 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 rolling. Bitty, 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 can't you see? Wow, whoa, 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 916, 916,000. Woohoo! Could have been as high as 1 million. 916 is pretty good. That means the average expert that does this for a job was only 50% off. They were only wrong by 50%. Oh, that's all right. Good enough for an analyst. That's why they don't make big money like a trader. So we're coming in hot here, 916. Last month is revised up significantly by another 50%. Shows you how bad the numbers are. But whatever, it doesn't matter. Good, bad, or the ugly. This is how we trade it. Cool. So we got some dipsy doos. Let them figure it out. We're going to hit some stops. People are going to freak out because they didn't expect it. You and I talked about it for a half an hour. Very good. Add this to your macro trend. Okay. Now, here's the thing. Let me get the actual non-farm payrolls report. Because I want to see the change in hourly earnings. Okay? I got to get the employment subcomponents. And stupid Google won't let me open it. Bureau of Labor Statistics, NFP. BLS.gov. Okay. Because what I want to see is how this impacts inflation. So some people are going to go, oh my God, 1 million jobs. Inflation's going to go through the roof. Unemployment's down. Inflation's going to go through the roof. And I told you before I explained that it's not likely, because I actually believe even though jobs will be up, unemployment will be down, wages will be down. It doesn't make any sense unless you understand. And so now we got to go and take a look at that. So let me get the headline here. Bureau of Labor Statistics. So this is it here. Okay. So I want to see wages down. Rose 916. Unemployment edged down to 6.0. I thought it'd be lower than that. The continued resumption of economic activity. Great. Job growth widespread, led by gains in leisure and hospitality, which we talked about 20 minutes ago. Public and private education and construction, because wow, that's booming. Awesome. Great. Among the worker groups, among the unemployed, long-term unemployed, labor force participation rate, great. Number of persons employed, great. Number of persons not employed, okay. Among those not in the labor force are currently confirmed, okay. I'm looking for wages. In March, leisure, in March, unemployment, manufacturing, transportation, employment in the service sector, social assistance, employment in wholesale, retail added 23,000 jobs, employment in mining, financial activities, employment in healthcare. Okay, I'm going to need some wage growth here. U6 unemployment is still at 10. Okay. And, oh, there it is. Average weekly earnings. I'm right. Hang on. This is it. I guess I'll get it off NFP, off FX Street. Check it out. Wages are down. Wages are down. How the heck did I know that? Huh? Isn't that cool? Isn't that wild? Wild and crazy. So here's my problem, or here's our problem. Not everybody knows this stuff. So they're reacting to the headline number. Oh my God, 1 million. And some people are going to say inflation, inflation, inflation. The bond market is open today, by the way. The equity market's closed, but the bond market's open till noon, I think. And so the bond market, you're probably going to see yields really be volatile today. And then people are going to say, oh, look at the yields. The Fed's going to have to raise interest rates and all this kind of stuff. And you might get overreaction based on nonsense really today. So be careful. Ultimately, what I've proved to you is smarter. Okay. Employment is up by 1 million. So we're getting closer to pre-COVID. We still got a ways to go. But what we found is the waitress at Applebee's, right? The maid at Marriott, the bartender at Señor Frog's in San Diego got their job. They got their job back. Cool. That's all we know. That's cool. But that's not inflationary. Do you understand? Now, yes, it's up, let's say generally, but not relative. And in this case, so when you add the lower wage workers to the higher wage workers, wages went down even though jobs went up and unemployment went up. So we called all of this before it happened. So people might freak out for today and say, oh my God, 1 million. And the market does this. And then in a week, they finally realize, if ever, that, yeah, the waitress at Applebee's is not going to drive up inflation in the United States. So I think this should go up. The initial response was down. I think up. I thought up yesterday. I thought up a month ago. I said up 6 months ago that April would be pound dollar up. April, euro dollar up. April, Aussie dollar up. Okay? You understand? Capiche? Ishkutia? You guys like being smart money? Isn't it nice to know? Cool. So now what we want to do is buy dips. Okay? Watch this. These are dips. That is a drop. Okay? We buy dips. Not drops. Cool, right? Marion says up already. Yeah, but what I mean is for the next 100 days. Cool. 100 days. So let's take a look around the world. Dollar's weak. Yen is weak. Swissy is weakening. Oh, I love it. Oh, it's so good. Oh, man. I'm going to be pounding those margaritas on the beach today. I'm like, that was such a great NFP. Look. Yeah, it's going to be great. Then I'll see you Monday morning, by the way. From the FL, I will be doing my Monday morning live stream to Traders Way clients. So if you want to join those live streams, visit tradersway.com, open up a demo account. The link to the live streams are in your back office. It's free. Take 15 seconds to open up a demo account, tradersway.com. I'll see you Monday from the FL on the beach. Wayne's going skinny dipping. The Atlantic's not big enough for me, Morena. I'm a whale. Cool. Everything's up that should be up. Nice. I love it. Everything's down that should be down. What a perfect storm. Let's go back to our exotics and see how that played out. Oh my God. So I'll check my positions. I have 2 trades on this account. Still up 700 pips. So I haven't made much since yesterday. I was up 700 pips yesterday. So I'm just farting around in here doing nothing. But it doesn't hurt me, right? It doesn't hurt me. USD should be weak, so that's good. Okay, peso doing its thing. So it really comes down into swing trading, right? So let's take a look at yens. Well, actually, you know what? Let's see who's benefiting more. Is it dollar or yen? And it's yen. Yen's weaker. This isn't a prediction, by the way, just so you see this. This isn't a prediction. It's sort of like what I would like to see over time, meaning I think both dollar and yen will be generally weak between now and the end of summer, like for quite some time. But I'd like to see, it's not a prediction, I'm looking for signs that dollar is weaker than yen, but I think generally they're both weak, just so you know. Okay? Beady 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 beady. Yeah, all right. What do you guys want to talk about? We got 19 minutes before I'm going to pull the plug and go to the beach. Remember, the stock market's not even open. The markets are not even open today. And the government decided to release this report. Really strange that they didn't push it. Okay? Cool. So welcome to the second quarter. This is such an important part of the year. Oh my God. Here we go. All right. I got to pick on this one. Come on. All right. Alfonso, let's take a look. Alfonso says Euro CAD. Euro is strong. CAD is gaining strength. What would you want me to tell you? The yen is weak. The dollar's weak for clear, obvious macroeconomic reasons. And you want to trade something that has been strong versus something that's becoming strong. I honestly, I don't even want to look at that chart. It makes absolute no sense. So put the pieces together. Macroeconomics based on a blowout non-farm payrolls with a diminishing wage growth is obviously something that'll weaken the yen and weaken the dollar. Okay? So what you need to be doing is buying something against the yen, buying something against the dollar. EuroCAD doesn't make any sense. It just, on the RSI, it makes no sense. You're not making sense. Now, you're doing technical analysis, which is a good start, but you're doing good work with an absolute flawed strategy. It literally makes no sense. Fundamentally, it makes no sense. But here's the worst thing, right? Alfonso, if I open up a chart and I see something good, you're let's say an RSI, we're kicking off of a pivot, we're kicking off a psych level, and let's say it's moving down or up. I don't even know what it'd be doing. The worst case scenario is I make the trade, but the thing is it's not likely. The probability of your relative strength and the fundamentals behind the why of the fundamental strength makes no sense. Okay? It's just gobbledygook. So you might see something on your chart, but it's a mirage. And even if you make money, you would have made way more money on a different trade because what you're asking doesn't make any sense. Okay? So I would rather use, like, for example, why don't you tell me, do you want to buy EuroCAD or do you want to sell EuroCAD? How about that? Let's start with that. Let's break this down. Come on, Edney. Come on, we don't have much time. Bounce with me, bounce with me. Buy. Okay, so you're buying euro. So therefore, you should look at euro yen and euro dollar. Okay? So let me just pick on euro yen, just for the sake of random. Okay? Cool. So let's do this then. We got some challenges here. What are the challenges? This is the monthly M3, and we know this to be a sell zone for bears, not for bulls. And we also know that somebody's looking at this as a top as well. So this is a price top and a market top. This is why trading at the news is quite dangerous. Instead, front running would be a lot better. So we got this problem here. This is why trading on the smaller time frames can be dangerous. And even if it breaks to the upside today, remember, not everybody gets it, right? So you got to be a little careful. So what we're doing is we're fighting 130. Okay? So let's break this down into smaller digestible pieces. Let's assume it does make a higher high, and at the end of the month, we're higher than 130. So let's go into swing trading with a bullish bias. Okay? And that means if there's a drop over the weekend to this area here, you might have an opportunity to buy. The second thing is someone's already traded the front run. You see this? We call this a role reversal. So price action dictates this. Up, 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 down, down. Okay? What used to be resistance becomes support. Okay? Up, 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 up to resistance, down, down. Now you can call this role reversal too, or the new higher high. Okay? There's your old resistance becomes support. So there's your down, down, up, up, up. Old resistance becomes support. So there's definitely a price action play here. This is a shorter run move though. Okay. So there's that. The way to have traded this is maybe to be in a little earlier, or you let it settle after non-farm payrolls. You might have to wait an hour. Okay. The next thing is if it closes high today, okay, so let's say it does go higher today. We have a close here. This is going to move up to here, and you'll find out this was a weekly front run. That's why you have to think ahead on a lot of these things, right? Right? So the math here would move the pivot here, and that's why these traders have already traded it. Or it's confirming that traders have traded it, one or the other. Okay? Next week's target, with that in mind, okay, is going to be about 131.50. Okay. Target next week 131.50. Cool. Okay. So now I want to go back. I want to go back to this, and I want to go change this now. Actually, let me do it this way. I'm going to change it back to a monthly. Okay, so we're going to look at the position trade now with the weekly in mind. So what do we know about the monthly? Okay, monthly, there was a front run last week. Second chance test. So you're either long at 29 or 29.50, front running NFP. And the target now is 132. So this is telling me that somebody's wrong here. So let's do it this way. Monthly projected high is 132. You're like, wait, that puts us at the top next week, right? There's not much difference between 130, 150 and 132, especially when you have a confluence of resistance, right? So you're like, there's not a lot of difference going on. So that makes this pretty solid, unless we haven't calculated something. And what we haven't calculated is the fundamentals. There isn't a calculation for this. The way that these targets have been created is based on what happened in March, based on what happened last week. And March is not April. February is not April. January is not April. April is April. And the calculation that isn't involved is the average range, let's say, that is produced by an April. This analysis is looking at last period, March, and saying, well, based on what happened in March, we have a general idea of what's going to happen here. But it's not the truth. This is just an algorithm doing statistical analysis of what's already happened. It cannot predict the future. It can only tell you what has occurred. You have to be smarter than technical analysis to think forward. And you should say, if you buy today or tomorrow or next week, you could potentially hold this for 100 days. And you should have the alpha that says March targets are not April's targets are not based on March's targets. And your research, having looked at 20 years of this, is that, dude, you're looking at more like 133 to 134. You're out here, man. Because this will go up and 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 up. Is that what you think? Is that what you've researched? Have you done the analysis? In my live swing trading group, we already planned out May a week or two ago. I think it was 2 weeks ago. Sorry, we planned out April 2 weeks ago, and May and June. Let me say that again. 2 weeks ago, my live swing trading group planned out the last of March, all of April, all of May, and all of June. And if you're not my group, you probably show up every day to the market going, hey, what's up, fellas? What's going on? Are we buying EuroCAD today? Huh? And you will be crushed by those that are ready, willing, and able. But the fundamental basis of our trading ideas comes from research. Research. Why? We start with the why, and once we've decided the why, we use scientific methodology to set up trade plans using technical analysis. Because technical analysis only tells you time and price. That's it. It doesn't tell you why or what or how. That's it. Just, is this the right time or is this the right price? To do what? Are you a buyer or seller? I don't know. Good luck. Okay? If you're not a bull, if you're not a bear, you're going to be a liquidity event. And we thank you for that. Okay? Have I provoked anyone into thinking about currency trading in a different way? Okay? You must think differently. Most newer traders don't even understand the concept, and a lot of gurus get you sidetracked on getting rich quick, getting rich easy. You don't need the long-term charts because it's too long-term. Everything's in price. All you need to know is price. You don't need to understand why. You don't need to understand fundamentals. You don't need to understand economics. You don't need to do long-term planning. Everything's in the price. The price is always right. Let's try to make 25 pips today, and we'll ring a bell and celebrate how rich we got and how easy it was. it's pathetic. I want you to say, I want to be a professional and I want to understand why, and I'm going to answer the question why through analysis of macroeconomics. And because I understand macroeconomics and I can interpret the same data as a central banker, then I can then be able to anticipate changes in monetary policy, which directly impacts both the bond and currency markets and the flow of capital globally. And because of understanding the flow of money globally, I can be a successful foreign exchange trader. And I can anticipate in advance. Therefore, I can be ready, willing, and able to take a trade before you even see it in your technical analysis. You will already be in the right spot at the right time. You'll use scientific methodology to say, aha, my hypothesis has been confirmed. You fire for effect and you destroy those who are not ready. What's going on, fellas? What are we trading today? Boom! Somebody got crushed. Liquidity event. Okay? 20 pips a day is embarrassing. Do not take on a strategy like that. Do this first. How about this? Don't listen to me. I don't know nothing. Open up an Excel spreadsheet. Okay? And say you want to get to a certain level of wealth, whatever the wealth is, and flow it out. I did a 3-year. I did a 3-year portfolio pro forma cash flow statement many, many years ago to figure out what I needed to do. And this was so enlightening. So I recommend you, okay? Right? I recommend you do this for yourself. Create an Excel spreadsheet. Look at how much money you're starting with. Think about how much you really want to end with. And do it day by day, okay? You can do this. It's not hard with Excel, right? Day by day, week by week, whatever. And you plan out your average wins, your average losses, your success ratios, and your lot size relative to your account size. Okay? And flow how much, right, this grows over time. You're also going to have to calculate how much you pay yourself and how much you reinvest back into your trading, okay? Here's what I think you're going to find, if you don't mind me cutting to the chase, because I'm about to leave and spend time on the beach with my wife and my children and my family. You will find the only way, when you account for your wins and your losses and all this kind of stuff, the only way you can achieve your personal financial goals 5-10 years from now, if you're only making 20 pips a trade, the only way you can achieve your goals is to by having large lot sizes. And mathematics, statistics, probabilities will show you that you will blow up your trading account and you will not hit your long-term financial goals, because the amount of risk you take is unbelievably high. Now you're told, well, you get out quick, you get in quick, you get out quick, you never really expose yourself to risk. And your lot size is so small, is one pitch, your stop is 8 pips away, so you can't lose more than that. The other thing is, someone might say, well, don't use stop losses, and that's even worse. So all of this adds up to a giant pile of stinky trading ideas. It is not correct. Just do the math. If you spend, I spent probably close to a week on this Excel spreadsheet, and I calculated everything, and I found paradoxes which were amazing to me that changed the way I traded. And I beg of you, I implore you to do this analysis so you can see for yourself that it's a fool's errand and fool's gold to be so short-sighted. And you will find the math doesn't work, and you will blow up your trading account. Those sales pitches don't work. What you need to do is be in trades for longer periods of time, because not because you're not getting out and you're not managing your trades, but because of the analysis you've done ahead of time. Your understanding of macroeconomics, your understanding of monetary policy, your understanding of seasonality, how each quarter is different from the other, how each month is different from the other, and you put all of this together with proper trading habits, your trades are just worth more than 20 pips. You should be going for 200 pips, 400 pips, 500 pips per trade. Not because you're taking bigger risk, not because you're making better trades, but because your trades are worth more because you've done better analysis. To be a professional trader, you must understand why. And the only means to understanding why is you've done the work, you've done the research, you've done the analysis. You set trades up in advance, and you're ready, willing, and able at the right price and at the right time to do the right thing. And if you're doing that kind of work, your trades are worth more pips. Otherwise, you're worth less. You're worthless. Your trading is worthless. You must focus on making it worth more. Not taking bigger risk, smaller risk. Because here's the thing, if you can predict a 500 pip move in euro dollar or something, you can have one little tiny trade today and it gets going and you let it go and you let it run, go. And after a day or two, it's up 75, 80, 90, 100, 120, 130 pips. Great. On the next pullback, add another one. Now your second trade doubles the lot size, but the first one is already profitable. The stop's already at break even. You add another one, and now you still have that small amount of risk on that one trade. The other one's fine. You can't lose. There is no risk. So now the second one you get going, and you know there's another 400 pips in the move, so you buy the little dip, and now it takes off. Go, run, go. So now the first one's up 200 pips, right? The second one is 100 pips. So cool. The next time there's a pullback, you add a third. Go. So by the time the 500 pip move is done and you're hitting obvious levels of resistance, which is your target to take profit, one of them's got 500 pips, the other one's got 400, the other one's got 300, the other one's got 200, the other one's got 100, and you get out of the trade. You've actually taken the same tiny risk 5 times. 5 individual times, you might have been risking 30 or 40 pips on the one trade. The second one's profitable. Again, now you're only risking 30 pips, but your account is already up 130, right? And then the second, so you're only, when it comes to your risk gets so unbelievably tiny per trade. So tiny. But your focus now is on the analysis and then building positions based on your analysis. It's the way that a professional trades. Small risk, as small risk as you could possibly take. Now, if you do it that way, the only way you can make money is to make more pips. And to make more pips, you have to understand why and how the market behaves. If you don't understand that, then the only way to make money, since you can't make decent trades, your pips, your winners are pathetically small. So the only way to make any real money is to jack up your leverage, jack up your lot size, and it's stupid. Pardon my French. It's pathetic. Le pathétique. Vikram, as small as possible. So thank you for being on my 15th year anniversary of trading Non-Farm Payrolls live. 180 months in a row, I've done these webinars with FX Street and with you. Thank you for being part of my life. Thank you for being part of my team. Thank you for being part of the FX Street community. Thank you for being part of the FX Bootcamp community. Many of you have been members or are members. Maybe some of you will become members. That's really cool. And if you need a broker, please give tradersway.com the opportunity to earn your loyalty and respect. Might be through low fees, might be through fast execution speed, it might be through the amazing swaps. Okay, I'll give you an example. The swaps here on this RAND trade, which is less than a month, I've already made 10% return, internal rate of return. My IRR, okay, on one RAND trade over a month is about 10%. Just the internal rate of return on interest collected. We call that swap. Just the interest. Okay? Let me show you again. Just the IRR. Okay? So there's like about $100 to get me a mini lot, and I've earned 10% in swap. Now I'm up 400% in profit plus 10%. But think of it, a bond that pays you 10% a month. Redonkulous. Redonkulous. And I have a week before I get to the month. So it's going to be closer to 12% IRR just on collecting interest payments. Oh my God. Now, your broker probably doesn't pay swaps that big. They're cutting corners to put pennies in their pocket. That's what most brokers do. That's sort of the industry standard. So it's nothing wrong with it. But most retail traders don't even pay attention to swap. It doesn't even matter. But if it does matter to you, there's maybe one advantage for being a client to Traders Way. You actually get paid swaps and you get paid the full swaps. Cool, right? I love it. So peace on earth, may the pips be with you, may your profits be above average. If you become a client to Traders Way, I'll see you on Monday. Peace on earth, may the pips be with you, and may your profits be above average. Have a fantastic holiday weekend. If you go to the beach, wear sunscreen. Don't get burned. And I'll see you Monday. Thanks for being in my life. You're good people.